So I've got this written down about some ARC and PLC stuff here. I know it might not be as pertinent in our next meeting, but I'll definitely write that down and I'll have that on par to talk about next time. I'm sorry I failed you this time.
It's okay.
Okay. Now,
Uh,
I think, oh, go ahead.
All right, folks, sorry I lost connection, but we are going to go ahead and get started here. My name is Will Fett, and I am the Beginning Farmer Rancher Coordinator for USDA Oregon, specifically representing the Natural Resources Conservation Service. And I've got my colleagues today with me, Derek and Evan, who are going to talk about other agencies, the Farm Service Agency and the Risk Management Agency. And the purpose of today's session is to give you an overview of USDA programs. And then at the end, we will go into breakout rooms where if you have any specific questions of the representatives on the panel today or with the agency, in general, you can ask those in the breakout room. So we're going to try and get through the content of today's presentation and then open it up for questions and answers. Hopefully, I don't lose connection again. I apologize for bouncing out a minute ago, but I'm going to dive into the content of the presentation, specifically the Natural Resources Conservation Service. So the Natural Resources Conservation Service is a technical agency that provides conservation technical assistance to landowners, and then we know that might be the one roadblock to implementation might be the financial assistance component of implementing conservation. So we also offer financial assistance to landowners, and what that looks like is developing a conservation plan that can better your the financial assistance through a competitive app.
Uh-oh. You still there, Will?
Here,
Oh,
hopefully,
there you are. Sorry, it's breaking up
we'll
just a little bit. Okay, yes, I think we're having a little technical difficulties on Will's side. I'm sorry about that, guys. What I'm gonna go ahead and do, just for the moment, I'm gonna double check before I make a fool of myself. I'm actually pretty good at doing that. What I'm gonna do is I'm gonna give Will a chance here to jump back on. I'm gonna send him a quick message. Will Fett. Okay, so I sent Will a message here, and what I'm gonna go ahead and do is I'm gonna start in on my presentation while he kind of sorts out some of his issues. All right, now hopefully you guys can all see that screen there. It says FSA Beginning Farmers and Ranchers. Now, again, Will was introducing the NRCS. They deal with a lot of conservation and certain things to help you guys cost share and basically improve certain things on your farm. On FSA side, what we do is twofold. One thing we do is programs, and the second thing we do is loans. They're they can be jumbled a little bit. When it comes to programs, there are certain programs that one might think of as a loan. Let's say that you're thinking about building a farm storage facility like a silo or a barn to hold your hay. That would actually be a loan, right? I can give you the money to build it, but you're going to have to pay it back through the program side. So I'll go into a little detail here about what's the difference between programs, what's the difference between the farm loans, and kind of how to navigate that, as well as what I need from you to get eligible and to apply. Luckily enough, recently there's been a huge push on digital information and ease. So we've got a few websites here that I'll show you at the end that you can jump on, you can apply, you can pay your loan payments if you were to be approved, and look at a lot of the other information you need to get a different loan or your first loan. So I'll just jump into it. Again, my name's Derek Johnson. I'm a farm loan specialist. I was the outreach coordinator like Will is now before, and it might happen again. I'm not really sure moving forward. Unfortunately, we'll be losing Will on Friday here. So if you guys have any questions and you're looking for somebody to talk to and you can't get a hold of Will, reach out to me, reach out to Evan. But beyond all that, make sure to reach out to your local office. FSA, I'm in Malheur County, but in every single one of your offices, there's going to be a county office. They may or may not have a farm loan presence. So when you walk in and you want to talk to them about disaster assistance, you want to get some NAP or a non-insured crop insurance program. If you want to get any of that, you walk into the FSA office. Each and every one of those offices is going to be able to help you. Some offices, and only some offices, can help you with the farm loan side. They're basically two different sides to FSA. Again, farm programs and farm loan programs. They act in different ways and they operate in different ways. So just pay attention to that. When you walk up to a PT that's on the county side and you say, hey, I want a loan application, I want to apply for NAP, and then I want to put in my ARC application, all that's not going to happen with the same person. So on the disaster side program, there's a lot. I'm not going to go into each and every one today. If you have questions, again, like I've said before, I am in no way, shape, or form the specialist. So feel free to reach out, ask me any of those questions, and I will make sure to get you the right person. When it comes to farm loans, that's really where my emphasis and all of my history has been. I've worked with producers and I've worked up to the state office and with the national office to make the farm loan side of things operate. So let's just jump into it. Again, I've talked a little bit about this already, but some of the disaster programs that I am talking about is the non-insured crop disaster program, or NAP. So in certain counties, you can insure a crop, and in other counties, that same crop is uninsurable. One of the disaster programs that we offer is NAP. You can come into the office with an uninsurable crop, and for a small premium, we'd be able to cover that for you. If you're a beginning farmer, or if you're an SDA farmer or a socially disadvantaged farmer, NAP is free in certain circumstances. Again, I'm not the professional on that, so come talk to your local county office and they'd be able to direct you in the best way. A few of these other programs we've got is the Livestock Indemnity Program, the Livestock Forage Disaster Program, and the Emergency Conservation Program. There's a lot to each and every one of those. So I highly recommend walking into your county office, talking to your PT, talking to your CED and saying, hey, what should I do? This is what I produce. How am I going to get the most benefit out of each and every one of these programs? And they'll guide you in the right direction. And again, on this farm program side, you see the Farm Storage Facility Loan Program. And I specifically said a slide ago that the farm loan side and the farm program side are separate. This is one of those programs on the farm program side that is a loan, but it's administrated through them. So it's something that you could talk to your county office about. There's some specific regulations tied to FSFLs, or farm storage facility loans. I'll get to them a little bit, But if you're looking at a direct loan and you can't qualify for it because either one, you've got too good of a business, or two, you have too much, too much collateral a bank would take you. This is a good opportunity for you to walk out and say, hey, I don't qualify for your direct loans. Let's talk about a farm storage facility loan to improve the property I'm on. So I'll go into that a little bit later. So one of the basic things you guys need to know is when you walk into FSA, I want you to do two things. These are out of order because I put them in order of importance, but I want you to flip them when you're thinking about what you need to do. Call your local office first and foremost, schedule an appointment. Each office has a county. Each county has an office you can visit. And again, they may or may not have farmland presence, but they'll point you to the appropriate office to give you the proper contacts to get you started. And again, I said this earlier, but a lot of NRCS buildings and FSA buildings are together. It's called a consolidated agency. So sometimes you can walk in and get two things done at one time. The second thing you need to do is establish your farm number. If you are farming and you own a place and you haven't walked in to talk to FSA, we don't know you exist until you walk in and say, hey, I'm farming here with this crop on this field, and this field, and I switched out this field with that. You got to report your acreage. Then we can tie what you're doing to you as a producer and start to get information to you about, hey, this program's available. Hey, you're not taking advantage of this program. Would you like to? It starts to really tie everything in. We're not trying to track you, but when you have a program that takes your 3-year average production and says, this is what we're paying you on, quote unquote, it's difficult to walk out and say, here's this random person's 3-year production, because a lot of times that's going to be an average of the county. If you had an extremely good 3 years before that, right, your average is going to be skewed, not because we're trying to pin you down on anything, but because you didn't report. There's no proof where there's no reporting. So the more you tell us, the less we have to ask you later. And when other people walk in to get loans and you've told me what you can produce, then I can create a better average. I can give better loans later. So that's besides the point on what you need to do when you walk into the office, but here's kind of a general guideline. Another thing to do when you walk into the office is sign up for Gov delivery updates. You can also do this online at the Beginning Farmer and Ranchers farmers.gov website, but it's a really great way to stay informed of new programs coming out or deadlines that you need to do, right? There's crop acreage reporting deadlines and all other sorts of things on the program side. So let's move on to something I really know. I know farm loans. I'm not saying I know them better than anybody in the whole wide world, but if you guys have questions on farm loans, I can get you an answer one way or another. There's realistically 2 loans that I can do. They've been named in a number of different ways, so I can go down and start breaking them out, but there's 2 things I could do for you. The first thing is an operating loan. I can get you up to $400,000 to either finance a term purchase of cattle, equipment, improvements, anything like that, or to provide financing for your annual operating expenses, something that's reoccurring, right? So feed, fertilizer, rent expense, stuff like that. And again, when you have 1 year of experience, you're eligible up to a $400,000 maximum OL. I can term it out up to 7 years, but there's been some new flexibilities. So it would be a conversation on how the loan was structured when you came in. The second thing I could do for you is a farm ownership loan, or basically a real estate loan. There's a number of things I can do outside of just buying real estate with an FO, but the main thing we do with it is buy real estate. You need 3 years of history, and it's hard and fast. 2 years of history can be substituted for the following things: education. You got to have, I believe it's 16 credits of ag courses on your transcripts, military service, substantial management experience, and a SCORE membership. So to explain what substantial management experience is, because that's really one of the biggest questions I get, is substantial management experience is not walking out and setting water and saying, look, I managed all the irrigation on XYZ farm. Substantial management experience would be somebody walking out and setting water and selling cows and saying, okay, the corn's ready to harvest, so let's go with that. And buying fuel at the perfect time that they think, really managing a farm. It's kind of a rare thing. Now we can use the definition of substantial management experience to sometimes pad what we need it to do. The last thing we want to do is tell you no, you can't have a loan just because of 6 months of experience, right? That's ridiculous. But it is something that we'll look at. It is something that the better you explain, the less I have to clarify later. So the last thing is a SCORE membership. This is a little confusing, but there's a Society Corps of Retired Engineers, or excuse me, Society Corps of Retired Executives. It's a group of folks that will actually give you advice and mentorship towards whatever you're doing, whether it be agricultural related or investment related. You got to sign up for it. And it's a separate site outside of the USDA. It's not something I know a ton about, but I've seen a little bit of success from it, from people talking to somebody that may have not directly operated a hay farm, but owned 600,000 acres of rangeland and ran 10,000 head of cattle on, and they get to talk and really, hash out some of the issues that you might not have thought before, where experience all in all trumps any kind of book learning you can get. So that's something that we've seen a little bit of success with. If you have any questions on that, feel free to reach out. We can go into it. So a
Eric, I
farm
have a
ownership
quick
loan.
question for you, if you don't
Yeah,
mind.
yeah,
Is
go
that
ahead.
3 years experience, is that successfully running the business? I assume if you don't have
So
education.
success here doesn't have a factor. 3 years of running a business is it needs to be agricultural related. So how we verify it a lot of times is using a Schedule F. So if you have a Schedule F and it says, cattle farming, I can verify that in that year you've ran an operation, you had expenses, you had income, or you don't necessarily have to have income. It is good though. Uh, but a lot of first year, like a bull operation, you're not going to have income if you're only raising bulls. I mean, technically you should be selling your heifers, but let's say you retain all the heifers you have and you keep all of your bulls for the following year. Technically, that first year, you probably wouldn't want to see any income. They should be keeping all those bulls to sell in the second year. So regardless of what the financials look like, I just need to show that you've been operating as an agricultural entity, if that makes sense. Even
Got
if
it.
that's as an individual too. It's not like, oh, it doesn't have to be Farm LLC. It can be, Axel Eaton sole proprietorship. That's fine with me.
Cool. Thanks. I know there's a lot of big names in here. Thanks so much.
Yeah, you bet, you bet. So on the FO loans, I can go up to 600,000 bucks as a maximum. And I know right now that you're thinking, well, that's not much. I can go up to 600,000 bucks, but that doesn't mean that you can't walk out and ask for 600,000 bucks from another bank. That doesn't mean that you can't walk out and say, hey, I've got this guy with $1 million property. If I get 600,000 from FSA, the other 400,000, the owner of the property is willing to carry it on a note. We can do owner carrier joint financing situations. So don't let the 600,000 take any of the wind out of your sails when you're making that journey towards your first farm loan. There's ways to do it. That's why I want you guys to come in, sit down, and talk to your local lender, to your local FSA guy. They're going to walk you through how to do this. Another opportunity we have on the FO loans is a beginning farmer down payment loan. And what the beginning farmer down payment loan does is it gives somebody an opportunity that has a 5% down payment for a property to have FSA involved and to lower the entirety or the global interest rate. I can only give you 300,150 bucks, right? But that's at 1.5%. So if you go out and get a $1.2 million loan, I can take a second behind whatever lender there is out there, and you can reduce your interest rate on at least 300,000 bucks of that transaction to 1.5%. So certain things to think about when you're building and really moving through your options with FSA, but this is how we do it. Now, the issue I see in this slide, and I kind of made it this way so we can look at it, but each one of these situations require experience that can be extremely difficult to get. I understand that it's hard to walk out, find somebody to lease ground from, and do it on your own buck. So what the FSA has built is a program called a microloan. I can go up to $50,000. I can do $50,000 on an OL or an FO. So I can give you a 7-year note or a 25-year note for property. The FOs do still require 3 years of history. However, the OLs, or the operating notes to buy cattle, to buy equipment, or pay rent and stuff like that, I can substitute a year of history for a mentor. So if you have somebody that's done what you're asking to do, or somebody that's going to advise you on your journey, the history requirement can be erased using that mentor. We can substitute that. And then you can get a $50,000 loan the next year when you're thinking, hey, this is working, I'd like to grow. You'd be available to get an additional $350,000 from FSA. Because again, I can only go up to $400,000 total, but this $50,000 loan would count in that amount. And again, without any history, you can move forward with it. I've seen a lot of success to slowly grow things. It is a slow grow, but I think within ag, and especially nowadays with how volatile it is, it's almost the best way to go about it. Another way to go about getting some experience is a youth loan. Youth loans are great. They're one of my favorite loans. They're actually $10,000 now. I need to update this, but they're $10,000 as a maximum. You can get a term OL or an annual OL. There is no FO available for a youth loan, but you got to be a part of an ag organization like FFA, 4-H, or one of a tribal youth org, and your parents got to co-sign on the loan. But we can get you $10,000 to buy breeding stock, so you can start to grow a small herd. Working through FFA, maybe you want to take one of the steers from your 5 head, right? And you want to show it that year. We can give you operating funds. We can give you those term funds to buy the animals and to fund that operation moving forward. Now, and of course, there's the old-fashioned way. Is get out there, find a lease, work for your employee, your family, somebody you know, get in there and just start farming. That's the best way to do it. Somebody said the other day that we have been communicating the idea of what a beginning farmer is poorly, and I get that. A beginning farmer isn't somebody who hasn't farmed before. A beginning farmer is somebody who has farmed less than 10 years, which I know it sounds nuanced when I say it that way, but it really does make a difference. So just keep that in mind when we're going through. Farm storage facility loans. I talked about this a little bit before. I am not going to break down this slide because it will bore each and every one of you to sleep, but I want you to appreciate how I put the storage facilities behind the slide itself so you know what I'm talking about. There's a few things that we can do and there's a few things that we cannot do with a farm storage facility loan. And the truth is, walking in and talking to that local farm loan specialist about what can I do with this FSFL? Is this the appropriate thing I should apply for? That's what you need to do. There's a lot more than just this that goes into making an FSFL work, and there's a lot of time. So the further ahead you are of your storage needs and the knowledge that, hey, I need to increase this ASAP, the better. Get into your office, start talking to FSA. We've got extremely competitive rates when it comes to this. This is the only time I will say, instead of going to a bank, to consider building any kind of storage facility on your plant or on your farm or on your ranch or whatever it is. Come to FSA and talk to them about an FSFL, because if you're eligible for this, the interest rate will be cheaper and the cost all in all will be cheaper. This isn't a direct loan, so it's different, right? This is a program loan. But if you are looking and shopping for interest rates, this is one you could do that with. A direct loan is a little bit different, but again, talk to your local guy, see what they say. And again, FSFLs are a whole bag. There's a lot to pull out, but if you have the resources, you have the knowledge, and you have the time, it is definitely something to look at. If you guys have any questions on FSFLs, again, I'm not breaking this slide down either. I'd rather talk to you all about it in the breakout sessions themselves. Make sure to come in, talk to me. I'd love to talk to you more about FSFLs. They're not exactly my favorite thing, I'll level with you, but I will do it for anybody who wants one because I think they're that good of a deal. These slides are available for me if you need them. I have all the links for all the programs I talked about on the direct side. There's also guaranteed loans available that, again, we can talk about in the breakout sessions. There's emergency loans and a few other things I didn't go over, as well as more information on farm programs available here. So at that, I'm going to stop sharing my screen for a second. I'm going to check up on Will, see how my buddy's doing.
Hey, Derek, thanks so much for jumping in. I think my internet has been figured out, but we'll go ahead and pitch it over to Evan to cover the risk management agency, and then I'll bring us home. So, Evan,
Perfect.
if you're ready.
Yeah. Okay. Good afternoon. My name is Evan Yelenich. I'll be covering USDA Risk Management Agency's programs. Just a quick note before I begin, I'd like to go over the disclaimer with you. The purpose of the following material is to promote awareness of risk management concepts and to highlight USDA's risk management products, features, benefits, and availability. This material does not change the content or the meaning of current policy provisions, filed actuarial dates, or approved procedures. RMA's vision is to secure the future of agriculture by providing world-class risk management tools to rural America. And as you can see here, the different 10 regional offices and the states that are covered by each. Again, with the USDA Risk Management Agency Spokane Regional Office, and we administer the federal crop insurance programs in Alaska, Idaho, Oregon, and Washington. We also provide outreach to help farmers with risk management tools. RMA is responsible for developing and maintaining the federal crop insurance policies. This includes determining the rates, prices, and yields for each crop at the county level each year. RMA is also in charge of compliance to prevent fraud or abuse. Private insurance companies and agents are responsible for selling insurance policies to farmers and selling their claims. The federal government subsidizes the premiums to reduce the cost of crop insurance for farmers and reinsures the private insurance companies to share the costs of the claims. Federal crop insurance provides protection from production loss, price decline, or a combination of both for individual commodities. There are production and revenue plans of insurance, which are based on a farmer's actual production history. Area plans of insurance that are based on averages in the area, like by county. The Farm Service Agency also has a non-insured crop disaster assistance program known as NAP that is available in counties where RMA crop insurance is not available for a crop. So why should you consider getting federal crop insurance for your farm or ranch? It may help you stay in the business after a bad year, after a bad weather event or low production year. The government subsidizes the premium to make it more affordable. It provides some financial stability and may improve access to credit. Production-based policies insure against yield losses due to natural causes such as adverse weather, wildlife, insects, and disease. If the harvested plus any appraised production is less than the yield insured, the producer is paid an indemnium based on the difference. Revenue policies provide protection against price decline or increase, or a combination of both, in addition to yield losses. Projected and harvest prices are used to establish your coverage and to determine whether you have a loss. There's additional premium costs for this coverage added. There are 4 phases of the crop insurance cycle each year. The insurance plan, level of coverage, and price are selected when you submit an application. It is important to note the sales closing and cancellation dates. These are deadlines for buying or canceling your policy, such as spring wheat has a sales closing date of September 30th. There is also a date for reporting how many acres of the crops you plant to determine your premium. You have to provide a notice of loss to start the claim process as well. RMA may make program changes prior to the next year's contract date. Here's a program. Whole farm revenue protection is available nationwide and insures all commodities produced on your farm with a few exceptions for forestry and pet or sport animals. Coverage is based on your allowable revenue determined by your previous federal income tax returns. Specialty and organic crops and livestock are covered. However, there is a $2 million limit for animals and nursery. The whole farm revenue protection can be purchased alone or with other federal crop insurance policies or NAP from FSA. When whole farm is purchased with another crop insurance policy, the whole farm revenue protection premium is reduced due to the coverage provided by the other policy. To qualify for this, you have to be a U.S. citizen or resident, be eligible to receive federal benefits, file a Schedule F tax form as Derek spoke about earlier, have 5 consecutive years of federal tax returns, and be in the business of farming. If you are a beginning farmer or rancher, you only need 3 years of tax records. To ensure for the 2025 crop year, you have had to farm in 2024 and filed a Schedule F forms in 21, 22, and 2023. There is also an extra 10% premium subsidy for beginning farmers and ranchers. The microfarm is basically a crop provision under the whole farm revenue protection and has a sales closing date in our region of March 15th. If you meet the eligibility requirements at the sales closing date and you elect to purchase coverage under these microfarm provisions, these provisions will be attached to and made part of the whole farm revenue protection provisions. Different from whole farm, under microfarm, there is one single commodity code from all commodities under microfarm. Also different from whole farm, the history period is consecutive tax years prior to the policy year, which a minimum of 3 years and a maximum of 5 years, including the lag year. The whole farm history period is revised here to only require 3 years of history. There are a lot of risk management information on the RMA website. Here you can find an agent by clicking on Tools and selecting Agent Locator, and then selecting so Tools with the red circle, and then the Agent Locator right there in the red circle as well. This screenshot is the RMA website, which I believe we just updated it as well recently. But this is a screenshot of the RMA website that shows where you can find more information specific for beginning farmers. These benefits are also available for beginning farmers, including the additional premium subsidy and exemption from the administrative fee for CAT policies. So thank you again. I'm Evan Yelenich from the Risk Management Agency. I'm a specialist here at the Spokane Regional Office. This is our information. Feel free to call, and then again, this is our email as well, and then the website as well that we provided. So
Okay.
that is everything I have from myself.
Evan, we have two quick questions in the chat, and then I will jump into presentation. But first, can you answer, does WFRP also cover specialty crops? And what about diversified vegetable farms?
Yes, so it covers all crops. I don't know if that's specifically on there, but yes, it does cover all crops within it. I'm trying to look at the question. So you can diversify between your crops, and then it covers specialty crops. And then anything qualify for microfarm if they've been farming for more than 5 years. That one I might have to get back to. If you've been farming for more than 5 years, I believe you should still be able to qualify, and you'd be considered, or you would still be considered for the 350,000 or less. But when you're carryover insured, it turns into 400,000. These numbers have not been updated, so this is 350, and then for carryover, it's 400,000.
Okay. Well, go ahead. Yeah, hold other questions until the breakout session. I'm going to jump into some NRCS material. So again, apologize for internet problems earlier, but I'm going to try and catch up and pick up as we can. Natural Resources Conservation Service has 3 different types of programs that are immediately available to producers. A short-term option is the Environmental Quality Incentives Program, which is a typical 1 to 3 year contract. The 5-year contract, which is kind of the intermediate option, is the Conservation Stewardship Program. Takes a base level of conservation and steps it up a little bit more conservation across the entire farm operation. And then a long-term operation that folks can use is the Agricultural Conservation Easement Program. And easements are more in the ballpark of about 30 years, but can be written to meet the needs and the specificity of the individual landowner. NRCS does have other programs, for example, the Regional Conservation Partnership Program, but these 3 programs are kind of a good way to get your feet wet in what NRCS has to offer with regards to conservation programs. How does it work? It all starts with planning. We are a technical agency, so we want to help you develop a conservation plan and address those resource concerns that you might have on your property. And those can be vast and different, but once those are identified, the next step is application. And then once you've submitted that very simple 2-page application, that's where it gets a little bit more complicated because we need to do eligibility checks. We will rank your application against other applications we receive. And then once it is ranked and approved or obligated, then we will be stepping alongside you throughout the entire implementation process. And NRCS programs are typically a reimbursement financial assistance. So after the implementation, we will come out and certify that it has been done up to specifications and standards, and then we will provide you the reimbursement through our financial assistance program. The application process starts with a local district conservationist, and as has been mentioned before, we have offices in nearly every county throughout Oregon. So you have a local person that can help you come out to the property, look at the resource concerns that you might have, and then ultimately help you put that conservation plan together and the financial assistance application. Now, the program deadlines that are typically associated with our program are for, first off, let me say, we take applications year round. So any time is a good time to have that conversation with the district conservationist, start that conservation plan. But For EQIP specifically, that deadline is typically in November. We would be looking at this next cycle, a November deadline for potential 2026 implementation. If you are just desperate to get going, the Conservation Stewardship Program has a deadline this year of February 28th. So there is still time to have those conversations, get an application in, and be considered for this round of funding. As a reminder, the CSP, or Conservation Stewardship Program, is a 5-year contract, a minimum of $4,000 a year payment with additional payments for additional conservation that you might implement. So really, there are 3 very basic and simple programs that have a lot of flexibility and can be tailored towards your individual needs. Now, I want to just kind of paint a picture of what this might look like for you in your operation. And the most common farm and ranch practices in Oregon are brush management, woody residue treatment, forest stand improvement, irrigation pipeline for livestock, water control structures, watering facilities, and fencing. Now, this is just a sample of the conservation practices that are available, but really wanted to get your mind thinking about what are the possibilities. With the EQIP program, we might be addressing 1 or 2 or maybe 3 or 4 of these, but with the Conservation Stewardship Program, it is a whole farm program, and so you're looking at potentially addressing multiple resource issues. So I'm not going to share the videos with you today, but there is a really great Conservation at Work video series that has many of our conservation practices outlined, and kind of gives you examples of what other farmers and ranchers are doing, and would be a great resource for you to kind of browse through. It's called Conservation at Work. It's on YouTube. It's on our NRCS page. So please do check those videos out, and it kind of gives you an idea of what you might be able to do with your property, and specifically addressing those resource concerns. Now, after the application process, we do have applicant eligibility checks. So we work with our partners at the Farm Service Agency to determine all of those eligibility requirements. And then not only do you as an individual have to be eligible and comply to highly erodible land requirements, the land has to be eligible. So think about, is it, if you're looking at a timber stand, is it pre-commercial timber? So are you making money on that timber ground, or is it in that 20-year growth period? We can't help a commercial timber operation, but we can definitely help private landowners manage timber stands if they're not actively making money on those. I also want to make sure that you're aware we have special assistance to historically underserved producers. Those are beginning farmers, socially disadvantaged, military veterans, and then limited resource farmers. What that looks like is priority for funding. Your application is ranked along other applicants, but as a beginning farmer, or as a veteran, or as a socially disadvantaged, you get extra points in the ranking process. And in some cases, we have ranking questions that would increase your individual application's rank. For historically underserved producers, there is also a option for advanced payments. So I said it's typically a reimbursement program, but you could be eligible for advanced payments, and then also higher payment rates. So land eligibility and then resource concern eligibility are 2 things that we're also looking at through the eligibility process. So just know that some of these things kind of come into play, and not all pieces of property are eligible, but we do try to work with you as much as possible to help ensure that that you can take advantage of these conservation programs, because our #1 goal is to get conservation on the ground. And if we can help you do that, we would love to. I'm going to stop there with with NRCS and talk a little bit about a program that is available through the USDA Rural Development. So if you haven't heard of this one before, you might make a note because the application period is now. The Value Added Producer Grant application is open and available now. The deadline is April 17th, and so you do have some time to kind of get things figured out, but because it is a federal grant program, it does take time. You will need a SAMS number and a DUNS number, and sometimes those things take a little bit to get sorted out. But what is the Value Added Production Grant? This is a grant program that is designed to help you I'm going to say vertically integrate your business, provide value based on the raw products that you are producing. And a very simple example that I might say is if you're growing tomatoes but want to produce salsa, the Value Added Production Grant could help you get from tomato to canned salsa to farmers market. And there is a marketing component of this that helps you sell goods and services to local markets. So there are planning grants that are in the amount of $75,000, and then working capital grants that are in the amount of $250,000. Now you can absolutely apply for and jump straight to working capital grants, but a lot of times it does help the process if you first apply for a planning grant, get some things figured out, and then maybe in the second year of the grant cycle, apply for a working capital grant. There are priority consideration given to beginning farmers, so everyone on this call should have a little make note of that, and then some other eligibility things to consider with this program. So I'm going to drop this link in the chat and make sure that everyone has it. And again, that application period is open now and would really encourage you to consider the USDA Rural Development Value Added Producer Grants for Oregon. Now, we have just a little bit of time for with the group, but we are going to go into breakout sessions here shortly. So I've got kind of 3 things that will hopefully bring us home. First off, I wanted to let everyone know that the Rogue Farm Corps and Zenger Farms both have apprenticeship opportunities, and I see that Matt is on. So Matt, can you give a 30-second, maybe that's too short, but try to give your 30-second spiel about Rogue Farm Corps' apprenticeship program if you're able to come off mute.
Sure, thanks, Will. Yeah, hey, my name is Matt Gordon with Rogue Farm Corps. If you or someone you know is interested in gaining some sustainable farming experience in Oregon on a commercial host farm that's in production, check out roguefarmcorps.org. I'll put a link in the chat here in a moment. We do have about 20 host farms around the state in different locations. A lot of them are diversified vegetables, but there's livestock, there's seed production, there's different things. So if you are someone interested in gaining a paid employment experience, and then we also have an educational component that goes along with that, our Beginning Farmer educational event series, all on our website. I'll put a link there. So thanks, Will.
Thank you, Matt. I appreciate it. And Zenger Farms also has an apprenticeship opportunity. I just put theirs in the chat. It's a Google Doc. So please check out Rogue Farm Corps. Please check out Zenger Farms. Both great opportunities to get experience. The last thing I want to do as far as way of announcements is introduce Nick Davidson from Ag West. Ag West is an approved farm loan, and I'm getting the terminology wrong, but works very closely with FSA. And Nick, do you want to just briefly introduce yourself and give us 1 or 2 sentences about what Ag West is, please? Yeah, thanks, Will. Yeah, I'll just take a couple of seconds. AgWest Farm Credit, we are an ag lender that covers Oregon, Washington, Montana, Idaho, Alaska, Arizona, and parts of California. Where I work, I specialize in our Ag Vision program. Ag Vision kind of meets a lot of the same criteria that the other presenters have talked about today for young, beginning, or small. Young being 35 or under, small being less than 350,000 in gross farm income, and new being less than 10 years of farming experience. What we offer preferred interest rates, actually get a lower interest rate than most of our large commercial customers, as well as looser underwriting criteria. Even to break it down even more, we offer a Thrive loan product suite for really like first generation, first time farmers that are really, may not have the assets or the balance sheet to get a typical loan, but this is a loan that helps get people into ag financing. I do work very closely with the FSA to do the joint financing or their 54550 down payment assistance program. So if you have any questions, I know Will has my contact information. I might just throw it in the chat if you guys have any questions or just want to talk about ag financing in general. Please give me a call. But yeah, I'll put it in there and let me know if you guys have any other questions.
Thanks, Nick, and thanks for joining us today. Everyone, you will see that I've opened up the breakout rooms that you can go into and ask some individual questions. Please stick around and chat and ask your questions. We don't want to let anything go unanswered today. So with that, I'm going to stop the recording, but the breakout rooms are open. So please jump into those and join us for some continued conversation. Thanks for joining, everyone.